Hello. We're back again, my wonderful people. Sorry, I've been a bit of offline, and yeah, I'm here to do more of. Let me start with spike catching. It will be a series on the same template, but I want to start on 1 minute for spike catching, and then I go on to price action because it is more of advanced of market maker, but for boom and crash or indices it will apply to all the volatilities, but on M1 we will do mostly the spike catching. Okay, so let me say we start on M1 for spike catching today, and then others will follow. So this is an advanced setup of the market maker template. I will attach this template in our Telegram channel, so you will download it from there, and you just install it the way it is. Okay, and let's get to see our indicators. We have the moving average crossover alert, which is this, the blue and green. When the moving averages are crossing over, it gives you a signal. Then there is this shifted supply and demand. It is one of the best indicators for this support and resistance. Okay, and then there is the moving average. Let's check the moving averages. There is a moving average 5 exponential, the blue one. Okay, and then there is the moving average 13, the red one. Okay, there is the moving average 50, the dark blue one. Okay, 50 exponential. You will get this as a template, so don't worry about the settings much, but I will be so much gearing. And then the moving average MT5 Okay, so this, if you've done the market maker, you will know that there's always an added one, which is the 800. Okay, but for me, let me use the first three, especially on M1. When we advance to do the higher time frames, we will advance. Okay, and then there's the TDI. So leave this we are not using this for now. We are just using the TDI and the other one, and let me say this specifically today is just catching spike. So anytime we are above 200, now this is for crash, it will be exactly vice versa on boom. Anytime we are above 200, don't look for sell setups, look for buy setups. Okay, look for buy setups. Anytime we are above 200, don't look for sell setups, look for buy setups. Anytime we are below 200, look for sell setups. Okay, and why would I know that this breakout was going to be low? Is because prior to that we had been playing around the area 200 for long. Okay, like you see here, we were down it, came and crossed, went above one spike, retested around the same area. Okay, spike and touched 200, just one spike and touched 200. So it had told you by the time we were here that our trend had been broken. So did you see this? It's telling us it's on a resistance zone. Okay, so it has the alert indicator. Now come back. So on the same point, it spikes again. Now when it spiked the second time and it has touched level 200, okay, it may not mean much to you, but by the time this other small spike came, then I knew that our moving average 50 would come in handy. Like another extra spike has come under 50. Okay, under 50 and under 200. But now anytime we are like the 200, we are using it as ranging, and when it is above us we are spiking below. But the 51 is using as spike areas. Okay, so you see here, after this spike, it had given us an okay to use the 50 on the second one, and you see it came massive. So immediate ones come at this 5, extreme ones come at the 13, okay, and then the long ones come at 48. So they are all very, very important areas, okay. Here it came back to the 200 and spiked. Unfortunately, this one spike didn't cross all the moving averages like the way it did here, okay. So it didn't cross all the moving averages. So for me, I wouldn't take this setup to be very important. Although when the second spike came, it cut across. So by the time it was coming back, it was already under 40, 49, 48 or 50. And you see it spiked again twice, okay. So anytime we get a spike from level 48, know that it will be 2 spikes. So we got it here, 2 spikes. We got it here, 2 spikes. Come here again, a massive spike happens and it cuts across all the moving averages, and from there we went down. Let's go again here. I wouldn't have taken this to be very serious in the sense of you see, even on the TDI it didn't touch like the bottom and then it just reversed and went up, okay. So I would probably maybe have placed here when it was crossing, placed like down, but you see it was a losing trade, and in fact there was an arrow for me that it's going up. So since it was just one spike, it was not speaking much to me. But you see here, when it crossed, we all came down. We go, it's now our moving average 200 has gone below us. It's gone below us, so I will no longer be looking for sell setups until when we cross it again officially. So here I can comfortably, if I've checked it on the higher time frame, and I don't want to talk about scalping on this setup, but if I've checked it on the higher time frame and seen it's going up, I can comfortably place a trade. As long as we've crossed, you can place a trade, okay. But when I've not done it on higher time frame, I'm not. You see, and it came here, it spiked to come and retest our area. It didn't, it broke through a bit, but reversed back again, came on top. And let me point out something else to you. This, it was there again, another signal coming, bullish cross, bearish cross. This is dynamic, you know. So any crossover on the dynamic and on the main chart moving averages, it will give you that signal so that you decide if you want to place a trade. So this horn and this horn is straight line on this horn, and this one is straight line on our TDI. So I would have known that this is coming, yes, but I wouldn't be much serious with it, knowing that I'm above 200, okay. I would have gotten it, yes, because anytime it was above 50, I would have placed it somewhere here, but I wouldn't be very serious with it, knowing that I'm above 200. But since I'm not very far from 200, I will have placed it, okay. We go to this here. So we reset back and went up again. Another spike came, but we are still far from 200, so for me it's not a big deal. Anytime a spike will occur the first time and it does not touch 200, then I know we are not ready for a reversal. Okay, we are not ready for a reversal. So I'll still ignore all this until you see now, like here on the massive one that brought us the change of direction. Okay. After that, if you're listening to some noise, please pardon me. It is my fan that is making some bit of noise, and I can't put it off. It's a bit hot where I am currently, so I've put it on to enable me to do some editing, okay, and recording at the same time. So look here, one spike that we crossed 200, and here it came to retest the 45. Okay, this for me was not very serious. I would have checked how the market would behave around this area, because most of the time 200 is used as a very strong support and resistance for spikes on M1. Okay, and why I would be keen on this, check here. Now I'm picking a red line, so it's not helping us. Let me just pick my cursor. Do you see these points? The horn here and the horn here, the peak here, the peak here, and the peak here. So there is a divergence, and here is a straight line. So that would have been the first indicator for me. Yeah, number one. Number two, this here, the second one that is coming, is on a straight line, like you see, straight line, and a spike came. And I would have been very keen around this area, because after it retests the top area twice, it's formed a divergence and it spikes to the bottom of the TDI. The next that it will retest is middle. Okay, so I would have probably placed a trade here, even if I'm not very confident about it. I always put a stop loss of 4 to 5 minutes. Okay, so I've placed a trade because of the TDI, the divergence that the TDI has given me, because it spiked around the same area, yet on the main chart it is divergence. But again, why it was giving me the confidence for this second trade is because I was, you see, like this first spike is small, but it touched the moving average 200. Okay, so I was still on the same area of support and resistance of 200. Okay, so I would have placed this trade for sure, and see, I came down here. One secret with me is in my channel I always keep telling people, lock your profit. So in this kind of setup, you will not be able to get one spike and leave the rest. So what you do after the first spike has come, you put your stop loss somewhere like break even or a few cents above. So you get the second and the third spike. By the time you're on your second spike, you cover the first whole candle completely. By the time you're on your third spike, you cover the second candle. By the time it retraces a bit, yeah, as long as it's not gone above the red one, which is moving average 13, okay, there's hope of spiking. But the moment it crosses the red 13 moving averages, you close your trade. Okay, but at that time I would have probably, because this was another spike from somewhere here to here, so I would have placed my stop loss around here. Okay, so I was not caught. It came to the red and still spiked and spiked. But how do I know now the last spike that will no longer have much strength from here to go on? Always see if this last spike is smaller than this one and it is near the 5, like immediately after that spike, the 5 moving average is meeting it immediately. So at that time the momentum in the spiking has died down. So I would probably put my stop loss around the middle of this, the last spike, the middle of it. Okay, so I'm not closing out completely that that more spikes will come. I'm still giving it room, but still I'm giving it, again, I've blocked a lot of profit by the time I'm placing it there, my stop loss. Okay, on this third spike, I've placed it there. So the moment the market reached here, it took me out of the market. So I've locked my profit, and still I'm not locking out any spike that can still come. And especially knowing we had reversed from moving average 200, so there was a lot of potential of 5 to 6 spikes. Okay, so when you put it halfway, I would have covered a lot of profit and give the market room at the same time. Okay, let's continue again. It reached 200 again, spike. And why I could have caught this is because when it first reached its spike, so it was telling you since it had acted here, it will still act here. But the first indicator that it will act here is this first one that has spiked. Come again to our TDI. See, our TDI reached 0.68, okay, the upper line, and then it spiked to the middle market baseline, went on top there, exactly same level, okay, exactly same level. So this peak and this peak is giving us a divergence there. The same scenario that happened between here and here is the same scenario that is happening between here and here. Okay, so it spiked. So the third point that I would be checking for these spikes is here, the market baseline, because our second spike passed our red line, the market baseline. So after it had crossed, I could now wait as it is retracing back, as it is touching the market baseline, the middle Bollinger Band. I would have placed my trade there, and you see I got 2 spikes. Okay, so that is the best way to use a TDI, and this the market maker strategy. Okay, as long as we are below the moving average 200, and moving average 200 is used as support and resistance. So check how this first spike and the second spike, if it is giving you a divergence. So see, divergence here, the next is market baseline. Divergence here, next is market baseline. Okay, so after we break free from that, of course it has this balloon, it has to cover and go all the way to the top again of the Bollinger Band, another spike. And since now the spike came all the way down again, and we were mostly, this was the second time, it was not even the second, the third time it was retouching, so it was like a real retesting, so it had to go down for a long time. So in this kind of setup, as I told you, you just go down with the trend as you lock your profit, okay, until when you will be kicked out of the market. And even if you want to close your trades officially, I would have closed it here after it had crossed the moving average, that is the red one, okay, around this area, or even if around this area properly. So I just come with it as I lock my profit. The last one they don't go here. So anytime it will be crossed around this area, it will have taken me out. But again, coming here, see, as long as we are still in this area, the first thing that was supposed to show you is that the 200 acted as resistance again. So the first spike that came, I would have waited when it came along the same line, since it has given me that small spike. I would have gotten this because it is exactly the same line again, exactly the same line. So I would have gotten this and come down with it. I would still have gotten this because it was moving average 50, where every time it reaches it has to spike. You see, even all this, it was below. As long as we are under 200, this 50 will be very useful. So I would have gotten this and I would have gotten this. Of course, this second one was happened because I had not closed my trade. After I opened here and it spiked, my stop loss would have been placed halfway. So when it came, the second one, I caught it. Okay, let's go. So here there was no sign whatever. Here it gave me this sign. Here it gave me this first sign. So I could have gotten the second one. So here there was no sign whatever. No, this one here, there was no sign, so I would have leave that alone. Okay, as long as I'm now above 200, I'm no longer going for much spikes, because you see when they are happening and they are very small. My next tutorial will be how to use this to trade the trend. Okay, but here I just wanted to show you how to catch the spikes. I wanted to show you how to catch the spikes. So you have to be below the 200 to catch spikes on crashes. and above 200 to catch spikes on booms. Okay, so, and you see, after the crossover, it was just buying. Spikes came but small. Okay, came but small. Like here, it was just a resetting. It didn't, like, if the first spike and the second spike happens and it's not reached level 200, then you know it's just a reset. And from there, the market, you see, like here, it spiked 3 times so that it touched it, but it used it again as support, and it went up. Here it never even came across, and then it went up. 3 spikes is when now it touched, but yeah, we didn't have much confidence that it will continue going down. It was just a small reset, and you see immediately after that again it crosses over, and there was no sign here that it will use this as resistance, so we still go up again. Okay, so here 2 spikes, it reached and used it as support, but we are still going up again. Okay, see here, all these spikes, no much resistance, and yeah. So in such a scenario, look here, as much as our moving average is very far below, okay, it's very far below, but I want you to see something. So at this point, your shifted resistance and support would have shown you this. All these 4 spikes came on the same day. Okay, it came on the same day. So this first spike, the second spike, the third spike, the fourth spike. So after the first spike, because I know probably I would have missed that it was above 200, I could not have placed it. After the second spike of testing, and it spiked again, okay, I would have caught the third one because it had been retested. And even if I had missed the third one, I would have caught this. Why caught this? Because you see, at this time it spiked to level 50, but this time round it spiked to level 50, but now it used 13 so that it came down. Anytime it is a retesting signal, like the second one, so because this was the first one, so the second one, the spike will be massive. Yes, it has to go into, so this is the main one, and then the first retesting. The second retesting, it has to come into, it will be bigger than this first one. Okay, so this one. Now the third time, it had to be massive and go all the way. Okay, so here, I knew this would have been 2 spikes. So even if I missed the first one, because I didn't know, I wasn't very sure it would spike, but I would have caught in the second one. Same scenario here. The first one comes, I miss it, but now by this time round, I would have probably known that it will spike. I would have probably known. Why? All our moving averages now, it's like they've come together, and you see even our moving average 200 at this time is not very far. Okay, so I would have caught the whole of this spike, all of it, and even check on our TDI. So the first one is at the top. Yes, it spikes from the top, comes to the bottom, goes to the middle of the market baseline, which is down here, brings it down again, and see this hole here and this peak here is the same point. Okay, the same point. So whatever is happening on top is whatever is happening on this first 2 as well. And then from there, the market started going down. That is why you see all this whatever. So I would have gotten this spike, I would have gotten this other spike. Okay, and of course I would have gotten up to this. I would have gotten it all. As I've told you, I locked my profit and I put it half of the previous whatever. Okay, so I would have gotten this, but yeah, by putting it half here, stop loss would be somewhere here, and now because I'm above 200 and it didn't give me any reason here to use it as my resistance, I would do the place. The same case here. Yeah, the same case here. But because this was not like a very strong trending area, yeah, I would have seen my divergences like from the first point. Like you see, this first spike brings it down. down to the Bollinger Band, went to the middle. Now this second one was testing the middle market baseline, spiked down. This third one was market baseline, spiked down. So these two were market baselines as it's coming down. Okay, so I would still agree as long as the first one has been used as market baseline here. So know that 2 more or 3 more spikes will still be used the same way. So here baseline, baseline, baseline. So my first would have been here to show me that we would use the baseline. So I would have quoted this and I would have quoted this. Of course, I would have quoted this when it is continuous, the two of them, okay, because it was all on the baseline. It was all on the baseline, like one coming down. On top of that, immediately the first spike that crossed moving average 50, the second one came and used the 50. So that was a whole confirmation that we are on the baseline, but still at the same time we are using 50. Okay. Now come and see this scenario. This peak is the same as that peak. No, it's not. It's the same as the second one. No, it's not the same. Yeah, so it's not rounding. But look here. If within the shortest time possible, first spike happens and then second spike happens within the shortest time possible, I would have placed immediately. Ask me why. Because we are on the TPI, we are on the sellers area. Okay, I have a different strategy that I will give you also to always be able to catch this. But you see, even after first spike and our main spike that came here, it cut across all these moving averages. Okay, so as long as the spike that has come has covered up to 200, so I would probably know that most spikes are coming, and I would have gotten all this. Okay, I would have gotten all this. So as I told you, I lock my profit, so it's always half of this spike until when I'm taking out of the market. I'll talk next about scalping here. So let me not cover the two for now. All we are playing around here is just the TDI and the moving averages 50, 200 and 13.5, but mostly the 50 and 200. So this is a market maker template, know that. It's a market maker template. And so even in minute 1, market maker is very aggressive, even in 1, okay? So whatever happened here, this setup here, you see here, is the same repetition here. Okay, the same repetition here. So this one and this one on the same line, market baseline, but of course I would have missed because they were way far above the 200, you see. So it will trace back another spike, like immediately. So there is no correlation on this. But now this other one, if the third one that came used the market baseline, I would have probably gotten the other one. You see the way it used here? I would have probably gotten the other one. Okay? The following ones. And even if you see, here it used 200 to come down. Here it came across all of it. So one spike, you see the difference between this scenario and this scenario is that here it used 50 as support. The second one it still didn't break through, but the third one it broke through it. That was the difference between this setup here and this setup. Okay, so I would have probably gotten this other since I came down. And another thing also is here. these two used the same point. So immediately I would have gotten another spike on, the same area. It's using it as its resistance. I knew definitely more spikes are coming. Okay, and on the Bollinger, on the TDI down, it was using the market placement. So it was a very valid signal to come all the way down with it. Let's continue. I would have ignored all this because the moving average 200 is below, and this one spike and continue, one spike and continue. Like none of it is really even completely breaking through the 50. I would have waited to see how the market would behave around this area because we are nearing the 200 and we are already crossing the 50 most of the time. Okay, but it did cross, and even within that area there was no like here, it was not like giving me any correlation or divergence, like there's no formula, you see. So I would have probably ignored all this. I would have been a bit keen on how this behaves because it was on a straight line. I would have been a bit keen. Okay, so maybe even if I placed one trade that went into a loss, this may be one because I put a stop loss of 5 minutes. And from the time we started, this would have been my first trade that I lost, okay, of 5 minutes, but all the others have caught the spikes. Okay, all these I would have ignored because I'm moving average 200 until when we come to certain area. Okay, but still I wouldn't be really waiting for big signals from around this area because our moving average 200 is still below us. So yes, 2-3 spikes, but not like the massive spikes that come in such a scenario. Now you see here, you get a very good example. Anytime the crossovers happen, you see now here it reached the support, but here we came and we crossed. You see? So let's see how the crossover happened. This peak, now the first peak which is here, and the second peak, this peak and this peak used as market baseline, and it came down a bit, okay, and then retraced, went to the top here, and the second peak is the same as our market baseline on the second whatever, and it crashed again. So I would knew there is a continuation from there, but from there the third point of spiking was our market baseline as well. Okay, so this here came 2 spikes down and then started retracing. When it reached the market baseline, came spiking. So this for me was a very valid trade in the sense of it's using moving average 50 on top and it's using market baseline at the bottom. Okay, so I would have gotten this trade very comfortably and just came with it all the way down. Here it's still using 50, so one spike at 50, even if you had closed your trades earlier, so this one spike at 50 would have given you an indication that we are still going down. Okay, and came with it and we would have been locked out here. So here again we crossed 200, it spikes, it tells you we may be spiking more. So even if you had placed your trade around this area, you would have been on deficit a bit, okay, a bit like 5-10 minutes, but it spiked on you again, retraced the same point here, and now double spikes came. Okay, so even if you had placed your trade here, you went on 10 minutes loss, profit a bit, still went into loss, but 2 more spikes came. So it was from here, somewhere here to here, and that is 40 bars. 40 bars, that is a whole 40 pips. Okay, 40 bars. This was a massive spike. It is 3 spikes actually. Okay, So since it had touched our verified resistance, I wouldn't be keen after that to catch a spike. So I would wait for it to retrace. And you see all these, it's just small. Yeah. I would really ignore most of this because it was above our 200. Why I would be keen on the second one, not the first leg, but on this second leg, is because of this. Because of that, all this and this was all on the same line. Same line. Okay? And I know at this time my indicator must have shown me that it is a very strong resistance. So it spiked when it reached there. The second time again it spiked, so I would have caught the third spike and I would have caught all these spikes here. Okay? Now look here again, it spiked at level 50, but I wouldn't have given much thought about this, but yes, it was a valid location, and it spiked at level 50 in 200, but here immediately after the first spike I would have missed my trade again because you are already on a downtrend because of these massive spikes. Okay, and it took us all the way to our support at the bottom. So if after here I would have closed all the trade because I had seen resistance, and there you go, a very big uptrend. So basically, be very keen with the moving averages, the way they are behaving. If you want to scalp, make sure you are above 200. If you want to cut spikes, mostly let it be like here, like it's cutting across, or it's not very far, or it's under. Okay, it's under, like here, it's under. So those are the places I'm talking about. And this applies for bonds, it should be over. For crashes, it should be under. Okay. So, but if you want to scalp, you should be over for crashes and under for booms. Okay, you see all this. It will only come spiking down if, like you see this small level here, this small area does not determine that we have already started an uptrend in a very strong way. So that is why with one spike it came down massively, and you know now all the very spikes. Okay, so in such a setup, see, my shifted indicator would have shown me that it has previously spiked on that level. So I would have gotten this second spike comfortably. See again. Yeah. I would have gotten all those spikes. And since even we were like around the area of 200, and this would have been a very good indication to tell you we are going down. Okay, so here 50 is used. Here it is at this point, it was the same spiking point here and here. So immediately it spiked this first one, I would have known another spike is coming when it reached that point. And you see at the bottom it used the baseline. So next I will be doing the same strategy, but now for the buys. Like how do I know this is my buy position? Like when I don't want to cut spikes. So I will do for the buys next, and then the third one I will do for price action for still boom and crash, like when you are doing on 5 minutes or 15 minutes. Okay, so that will be the third. And then after that, I think I will be done with this template. I go to a next strategy. Okay, so that for today. Please join our Telegram channel so that you'll be able to download this template. It is a market maker template, and all these setups are the moving averages are the same setups that I use for how do I say? It's the same setup that is used for the market maker. Okay, so get this folder from our channel. So happy trading and God bless. Bye bye for now. I'm trying to look for at least